Hey everybody, this is Kevin with Leading Edge Financial Planning, and today I want to talk about going from FO to FOMO. Is it going to be a V-shaped recovery? We don't know. I'm going to do a thought experiment in the next video about a V-shaped recovery versus a U-shaped recovery and what you should hope for, V-shape or U-shape. All depends on if you're an accumulator or somebody who's in retirement. Even then, maybe not so much. But anyway, today the question is, what if I go from FO to FOMO, which is, FO is fear of. So the fear of, whatever the fear may be, the fear of, and fear is an unpleasant emotion caused by the belief that someone or something is dangerous. So I'm going to pop up a whole bunch of images here of fear, and this is what we've been feeling, all these different images over the last 4 weeks, maybe 5 weeks. So what happens when you go from fear to fear of missing out? Now, for those of you that sold in a downturn, I especially want to say something to you right now. Charlie and I would never condemn somebody for selling in a downturn. Never. We understand the fear of is extremely strong at that time. It's really easy to say don't sell because all academic evidence of the past says don't sell. But in a downturn, it's really easy to sell. And so if you did sell some of your accounts, maybe accounts that we don't work with you on, or if you sold even if you don't work with us and you sold all your accounts, or your brother or your sister or your family member did it, we don't condemn you, okay? Because the fear of is an extremely strong emotion. Larry Swedroe always says that stomachs are what make decisions in market downturns and panics. And boy, do we have a panic going on in the last 4 weeks. And he says, I've never met a stomach that made a good decision. So now we're to the point where the fear of is actually starting to look like FOMO now. It's like, well, geez, I just had the worst fear in my life. Now the market seems to have bottomed. Now, first of all, Charlie and I do not know. I mean, this is really where the massive pessimism was so far. We don't know if the market has bottomed. We have no earthly idea. Anyone that says they know if the market has bottomed or not bottomed is either deluding themselves or is a liar. We don't know. But anyway, so all of a sudden the market starts to go back up. The questions before were, should I sell? Now we're getting questions of, should I buy? And so I have a list of the companies that people have asked if they should buy, and I'm going to show you their charts, and then I'm going to talk to you about, if you have the fear of missing out on the upside, what should you buy? What are the companies that Charlie and I believe you should buy? So let's look at Love, first of all. Southwest Airlines, we work with a lot of Southwest employees. We've gotten a lot of questions. Should I buy Southwest Airlines? And the answer is that yes, Southwest Airlines, if everything returns to normal, when everything returns to normal, I believe it will. Southwest has mostly U.S. Now, they do fly to Hawaii, which is U.S. They do fly to the Caribbean, which is not always U.S., but they don't have international. So Southwest Airlines is very interesting because once the virus passes, when it passes, or when we get used to living with it, Southwest could be a great investment. So the one-year change right now in Southwest is 42%, down 43% year to date. The dividend, you're going to hear me mention dividends on all of these, although a company could cut the dividend. The dividend yield is now 2.36. So the question is, should you buy Southwest? Fear of missing out. Charlie and I don't believe in buying individual stocks, and I will get to in a few minutes why, and I don't want to say it about Southwest Airlines. But we don't believe in buying individual stocks. Now, again, over the last month, it looks like we had a bottom on the 19th, and nope, it went down even more. So in the short run, who knows what's going to happen with Southwest Airlines? So that's the first one I wanted to look at. Boeing is the next one, symbol BA. So again, Boeing, a number of years ago, Boeing was a $400 stock. Let me see if I can make it go out to a year here. Let's see if I can go out to 5 years to see what the high was. Yeah, it was 424. Now it's 124. So one of the simple heuristics or tricks that we play on ourselves is we say, well, it was 400 and something. I'm going to anchor to that price. And now that it's 100, my goodness, it's such a great price. And that's absolutely true. It is a great price. It's down 61.78%. It's a great price. Well, it's only a great price if they don't go bankrupt. And so, again, I am not going to make a prediction. I have family in Seattle. We love Boeing. It's a great American company. We hope it's not going to go bankrupt. But the issue now, and this is where I'll get into the individual stock versus our recommendations, the issue is if Boeing does go bankrupt, even though you got it at 100, if you lose 100% of your investment, it will go to zero. Again, I'm not claiming that it will go to zero. The next most commonly asked stock with the FOMO, fear of missing out, and maybe it's a good time to buy, is Apple. Okay, now Apple, sorry about the difficulties here. Hopefully you'll be willing to bear with me. Year to date, the chart, again, it's been as high as 325. It's now 241 before the market closed today. And so it's been down only 17.79%. Should you buy Apple? Well, I'll show you a way that you can buy Apple and buy other great companies. But, I don't know. It might be a great time to buy Apple. Now, Amazon, even my father called me and said, hey, I'm getting everything delivered. Let's buy some companies that deliver stuff. Amazon is a great company to buy. All right, so let's see if I can do this a little faster this time. So it looks like the high was $2,150. That's incredible for a share price. So Amazon is actually up. It's up 3% this year. So if you said, I want to get Amazon on a discount, right now it costs more than it did at the very beginning of the year. Do I think it's a great company? Yes, I do. I think it's a wonderful company. All right, let's look at Costco. If you've been to your local Costco lately, and I don't know there's the symbol. If you've been to your local Costco lately, Hade and I, we've been Costco fans for about 8-10 years now, and it's kind of eerie there. We think that we might not like it anymore because, they make you get in line. You have to go behind barriers. It looks like a wartime. I still like Costco, but it was at 324. That appears to be its high, somewhere around there, 324. It is down 1.79% this year. So yeah, Costco's not that much on sale if you buy an individual company. Now here's a high flyer right here, and somebody said that they know somebody that works for Royal Caribbean. They asked about it, and right now pre-market it's up almost 11%. This sucker, boy, it's been wild and woolly the last few days. But it was at 125. It's now down to 25. Interesting thing, narratives, the power of the story, the power of the narrative. I saw somebody, an analyst, who wrote a piece about the fact that their bookings are actually up in 2021. 2021, their bookings are actually up. That's crazy. So he was saying buy the stock. The issue with Royal Caribbean is that they have these big ships, and these ships have value. That is, they have book value. They can sell those ships, but they can still go bankrupt. So if you want to take a high flyer on a cruise line, which we're not recommending, but if you wanted to do it, just buy a little. Buy a little. If it's an itch that you have to scratch with any of these companies, buy a little. Okay, I have two more. Delta. Somebody contacted me and said somebody they know bought so-and-so $1,000 worth of Delta. Warren Buffett bought Delta. Delta is probably too big to fail. We work with some pilots from Delta. Hopefully they will not fail. They are down 62, almost to 62% here, 61.56 if we don't want to round it up. again in the last month. The company is back near its 52-week lows. I don't know. I don't know if I'd buy Delta. Okay, the last company I'm going to show you is J&J. That's another company that two people have asked me about. And is J&J a good buy? Well, interesting thing about J&J is before the market crashed, J&J was having some trouble. They had that talc powder issue with asbestos, but it's now $134 a share. Now, I will say for this one, the dividend yield is almost 3%. Right now, the 10-year bond has about 0.75% that it's paying, and that's probably the expected return going forward. J&J has a dividend of almost 3%. Now, could they cut the dividend? Yes. A company can always cut the dividend. It's down year-to-date 8%. So healthcare companies, some healthcare companies have actually held up really well. And I lied. I'll show you one more. Gilead, the possible company that will have the cure, or at least a treatment, not a cure. Don't use the word cure, Kevin. But they make remdesivir. I only know one person that owns this company. The issue with this company, it's up 20% this year, and this is the speed of information. Information travels so fast now. They may have a drug that's used to treat remdesivir, and so the market's already bid it up. Now, is it a good buy? I don't know. So I'm going to pause here, and then I'm going to get into what I believe that everyone should consider doing if you've gone from FO to FOMO. Okay, so this is the S&P 500 index, okay? Interesting thing about S&P 500 is it's based on how much money people invest in American companies. The more money that people invest in these companies, the bigger these companies are, the more percentage they make up of the index. So if you buy the S&P 500 today, you have a great chance that all the companies are not going bankrupt. It's 502 companies, and the reason for that is that some companies have two tickers, such as the two Googles, Alphabet C and A, Class C, Class A. But you can see that Microsoft makes up 5.68%, Apple makes up 4.88%. So every time you buy that ticker, that's the S&P 500, the fund, you are owning more Apple. So this is a way to do that. Amazon makes up the third, and then Facebook, and then we talked about Johnson & Johnson. It's 1.7. Berkshire Hathaway, this is Warren Buffett's company. Google, Procter & Gamble, they make everything with bleach and lots of cleaning products. JP Morgan still making loans. Visa, when we order food or we order from restaurants, we're using Visa. We're using our phones. Intel, where everybody's using their computer with Zoom and everything else. But you're buying all of these companies. Now, if you say, yes, I get the fact that buying the S&P 500 now, I own all these companies. But I want the juice. I want to make a ton of money here. I want the big gains. Well, with fear of missing out, I just want to remind everybody that we can immediately go back to the FO. We can immediately go back there. And Charlie and I believe if you have a diversified portfolio, when you go back to FO, you own tons of companies. Unless the world goes bankrupt, you are not going to have total devastating losses. There's a difference between total devastating losses, which is I own one company. That one company goes bankrupt, I have $0. The other one is I own, right now, the portfolios that we work with people on own more than 8,000 companies in the world. If all 8,000 companies go bankrupt, I could have total loss. But more likely what happens is my assets are worth less during market downturns. Now, I say worth less, not worthless. They're worth less. And so not only do we own those 8,000 companies when we own markets and indexes, we own the future companies that right now are producing things that we don't even know exist. And they're going to be, people are going to get excited about these new companies, these new products, these new innovations, these new services. And these companies are going to come into these indexes, and we are going to own them. So not only do we own the 8,000 companies that are known right now, we also own the companies that are unknown. Because what ends up happening, I'll take Facebook, for example. 10 years ago, Facebook was not a big player in the S&P 500. As Facebook became a profitable company, it went from you know, 427. Well, when it launched, it was worth more than that. So it's not a great example of an IPO. But let's just say, for example, it came out. It was kind of a small company, but it was in the S&P 500. Everybody starts investing in it. You own that growth in Facebook. You own that growth. So let me show you the last index that I think is interesting right now. And I will say it has to do with the narrative, and it somewhat goes against what we believe. But again, if you have the desire, if you have the FOMO, and you want to buy something, this might be something to buy. Okay, so again, my father, I'm allowed to talk about my father. He asked me the question, hey, can we own all these companies that will easily come back? And I said, well, what does easily come back mean? He said, ones that don't have storefronts. They have a lot of patents and stuff. And so this is the NASDAQ 100. Now, warning, the NASDAQ 100 in 2000 was down for 12 years before it returned to even. So this is only 100 companies. And if these 100 companies do poorly, like they did in the dot-com bust, you could lose a lot of money. But it's still 100 companies. Now, when we look at the 100 companies, this is the part that's really fascinating to me right now, is when somebody says, hey, I want to own all these great companies. Microsoft makes up 12% of the NASDAQ. So when you buy the index, 12 pennies out of a dollar are going into Microsoft. 11 pennies out of a dollar going into Amazon. 9.7 pennies, I don't know if there's such a thing as a 0.7 penny. Google, since there's two Googles, almost, let's see here, 7.6% is going in. And so you're owning all these top companies. Now will a company like PepsiCo continue to make snacks and Pepsi? I think so. Cisco, infrastructure. So if you say, look, I want more of the juice. I want more of, when I say the juice, I want the good stuff. Gilead is number 17 here. Amgen, Costco is in here. So I think that might be a way to go, is to buy the NASDAQ if you want to own, and these are mostly growth companies. They might do much worse than the S&P 500. They might do better. The thing we know is when you buy something different than the S&P 500, it will do differently. But if you have FOMO, please talk to us. We want to keep everything in perspective. We don't want to rush into selling everything or buying everything, but this is a great time to talk about investing. So thanks so much for watching. Have a great day, everybody.